So I was always curious about the stock market, but it's super complicated and I never knew really where to start. And what's the next one? And I never knew where to start. But that changed when a friend of mine gave me Barnes & Noble's gift card. It forced me to buy a book because, you know, a gift card at Barnes & Noble's, you can only get books pretty much. So I decided to get this investment book for teens, and I have it actually. And this is kind of like, you can press enter.
Okay.
And this is where I started learning about investing.
Right.
And I took it beyond the book. I started like looking things up online and stuff like that about the stock market, and that's how I got interested. So now, why I made this club? I have an interest in the stock market, and two, I wanted to give you guys kind of the same start that I got from this book through the club. Because I don't want to make all of you guys read this book or something like that. I want to be able to teach you guys and share my knowledge. So our lesson today is going to be just about what stocks are. So what are stocks?
They represent ownership in a business.
That's perfect. So, yes, they represent ownership in a business. And you can think of it as owning like a piece of a company. So for example, if there's a total of 500 shares in a company and you own 50 of those shares, you own 10% of that company. This is a Apple computer share. This is like an older Apple share. And that's a Google share. And then this is a piece of pie. And like each stock kind of like represents like a percentage of the whole. So what do you get from owning stock? You get dividends. When a company makes profit, they might distribute their profits to the shareholders, the people that own their stock. You'll get a little money from that. You can vote at shareholder meetings, and so you help out with some of the decisions in the company. For example, you can vote. You get a vote in the elections for the board of directors, and the board of directors is kind of like how we had like the Senate. We vote in the people that make the decisions for us, and you can also resell the stock, and hopefully for a higher price, so that you make money off of it. And this is a Walmart shareholder meeting. There's a lot of people there. Those are all shareholders. Big shareholders have influence. Who here has an iPhone? Raise your hand if you have an iPhone. You guys know what this is?
No.
Screen time.
The screen time setting. The screen time setting happened because of investors. Investors were concerned on how much time kids were spending on their phones, and they encouraged Apple to create something like this. So it was from investors in Apple created this setting.
Yeah, like a lot of times they have good ideas because they also do the similar thing.
And it shows that how much influence a shareholder can have over a company. Next slide. What you can't do, you can't manage the company. I know before we said that you have ownership in the company, but that does not mean that you can run the company yourself. When you buy stock, you're going to put trust in the company that you're investing in. You can't get discounts. You might think I can get 10% off if I own Apple shares. No, it doesn't work like that. And you can't take the company's shares. Now, what that means is just because you have ownership in the company doesn't mean you can take their property. Property and ownership in the company are separated. You can't go into like a company and just like take their shares, for example. So what companies can you invest in? You can invest in public companies. The public can invest in public companies. You can't invest in private companies. Private companies are not. You can't invest in private companies.
You can just like not through the stock market.
Yeah, not through. Yeah, that's true. That's true. So these are some examples of public companies. You got McDonald's, Domino's, Burger King, and then we also have some private companies. We got Chick-fil-A. You can't invest in Chick-fil-A, and you can't invest in M&M Mars. These are private companies. So how does a company go public? When the company has an initial public offering for IPO, this is when a company issues shares that anyone can buy. They like distribute shares that anyone can buy. These stocks are traded on exchanges like the New York Stock Exchange or the NASDAQ. And the reason why companies have these is so that they can raise money. By distributing or selling shares of their own company, they're bringing in money that they can use to grow their business. New York Stock Exchange, and that's them raising money. So how do you buy stock? The most common way is through a brokerage. You pay the broker a fee or a commission, and they fulfill your order, and that's how you can buy stock. Some common brokerages that you might have heard of are like Fidelity, Charles Schwab, and also, do you guys know what this is?
Robinhood?
Yeah, Robinhood. One thing interesting about Robinhood is that they actually don't charge a commission. It's completely free to buy stock. This is appealing to the younger audience.
Yeah, you could like download it on your phone as well.
Yeah, and
Just
it's
do it
an
online.
app on your phone. You can buy stocks from your phone. All right. So, what causes stock to change in price? It's simple. It's supply and demand. If there are more buyers than sellers, the price of the stock goes up. If there's more sellers than buyers, the price goes down. So, what are some things that create a price increase? First thing is increase in sales or profit. If a company's doing well with their sales, they're making money, that'll cause the stock to go up in price. Maybe they made a new product that people are excited about it. They get good coverage from the media. The media is saying, "Oh, this is a great company. We recommend you invest." Or maybe one famous investor buys shares, like Warren Buffett. When he bought Apple shares, the next day the stock went up a couple dollars just because he bought it. Maybe the whole stock market is up as a whole, and that causes that one particular stock to be up. There could be some rumors, some speculation about the company, and also there could be no reason at all. It can just go up. All right, so what causes a decrease in price?
Why do I have to wait 10 weeks to spend $100,000? I'm ready to win.
I told you, she's not messing around. You gotta start this, man.
She started threatening me last week.
Alright, so what causes a decrease in price? Maybe decrease in sales and profits. Maybe they're not making as much money as they used to. Or maybe there's some competition. Maybe there's another company that's doing better than them, and the price of their stock decreases. Maybe they get bad coverage from the media. Maybe the media puts them in a bad light, and it discourages people to invest in that company. Or maybe a famous investor sells shares of that company. I gave Warren Buffett as an example. Or maybe the whole stock market is down and everything is
Like
just
today.
not looking good. Yeah, today the stock market is down
Today's a good
actually a
time to
lot.
learn.
What?
Today's a good day to look in the news for stock market anywhere.
Yeah, maybe this is a good time to jump in the stock market because everything is
It's
down.
on sale.
Yeah, it's on sale. There could be rumors or there could be no reason at all. Picture Warren Buffett and some competition. Maybe like Apple's doing well and Android's not doing well. Alright, so now let's do. Now it's time to summarize what we learned. Just ask you guys some questions. So, what do stocks represent? Asking you guys. Right, they represent ownership in a company. Good. What are three major things you can do with stock, or what do you get from a stock, owning stock?
Dividends.
Dividends,
Ownership.
ownership. What can you do at meetings, at the shareholder meetings? The vote, you get the power of the vote. That can help make decisions, and also you can resell it at a higher price. What's three major things that you can't do with stocks? You can't take their chairs. You
Own
can't
the
take
company.
their property.
You can't control the company.
Yeah, you can't boss people around in the company.
You have influence, but you can't.
Yeah, you have influence, but you can't directly say, okay, you got to do this. Yeah. And you can't get discounts too. What do companies have to do when they go public?
IPO.
They have to have an IPO.
Good job.
And why do they do it? Why do companies have IPOs?
They have more money to spend.
Because they want to raise money.
Technologies.
They want to raise money.
Yeah, quick way to make money for companies.
For like new inventions and ideas and stuff like that. Like Apple probably raised money for like the for the iPhone and stuff like that.
One of the ways they did it was through the IPO. They made money off of people buying their shares. All right. What causes? Oh, yes. How do you buy stocks? It's through it's on the board. Through a brokerage, yes. And what are some brokerages like Fidelity, Charles Schwab,
Robinhood,
Robinhood? You guys know any others?
Franklin Templeton Investments.
I don't know that one. I believe you. There's also Vanguard. What causes stocks to change in price? What's the simple What's the simple
The ratio.
supply?
of
Yeah,
buyers
Supply and
and
demand.
sellers.
Good stuff.
yes, supply and demand. That's how you see this the fluctuation in prices. What are some big things that cause an increase in price?
More
Maybe-
buyers and sellers.
more buyers than sellers, and what causes there to be more buyers than sellers? Increase in sales.
Yeah, famous person.
Famous
buy
person
stock.
buys it. Good. What causes a decrease in?
Natural,
Maybe some event happened. Maybe like a factory like burnt down for them. That
Your
could cause it.
your CEO goes on air and smokes a blunt.
Yeah, like
Usually around like
Elon Musk.
Usually around like holidays and like Christmas time when people spend more money, like Black Friday is a good time to invest because a lot of companies.
Yeah, that's true. In the yeah. That's it, right? Next slide. This is just my works cited. just in case I get taken down for plagiarism, and now that's it.